shifting focus to another important story that we're tracking, and that is with respect to Asian Development Bank. ADB has retained a growth forecast of 6.4% for the ongoing financial year. Now, this is, they've retained it. India is obviously expecting to grow at an upward of 7%. What it says, very interestingly, that inflation is likely to cool down. Now, we're talking about inflation every day. We're seeing pulses, vegetable, tomato prices that we continue to discuss days on days at an all-time high. But ADB, is projecting that inflation will in fact cool down and India will grow at 6.4 percentage points. Is that a fair growth estimate, given that we're doing fairly well when it comes to all the other parameters?
So Shweta, we'll come to inflation later. The inflation data is for the entire Asian emerging markets block, not specific to India. But yeah, the 6.4% growth rate for India is India specific. Now, do you remember what was the estimate forecast for FY23 by Asian Development Bank? 6.4%. How much did India actually grow at? 7.2%. Right. So I think ADB, I feel, definitely needs an Indian economist in the driver's seat to begin with, right? So that the parochial view on India's growth at some point meets reality, right? But I don't want to...
I mean, it's fairly, if you come to think of the difference between 6.4 to 7.2 is fairly large.
Absolutely, absolutely. It's trillions of rupees worth, right? Or billions of dollars worth of delta between a 6.4% and a 7.2%. India's economy, I think, was last year at $3.2 trillion, right? Now, $3.2 trillion, if you were to take a 7.2% versus a 6.4%, will be a couple of $1 billion for sure, right? Couple of $100 billion would be my guess. So, yeah, so I think the statistics, the analysis, the research that goes into ADB's disclosure of these numbers needs a little more sense of reality, I believe. But I don't want to sound, foolishly bullish on the India growth story.
Right.
There are enough signals
we continue
that
to discuss exactly signals and parameters that continue to augur really well for us.
See, I think very simply put, we have the G20 finance ministers meet happening in India, right? And look at the remaining pack of 19 countries, leave India aside. India is definitely in a healthier spot when we talk about, India's growth rate, when we talk about unemployment rate, and when we talk about inflation, right? So overall, India's macros are in a fairly sound space right now in the G20 bloc, right? Even in the emerging market space, look at China. China's growth data, which has come out, many analysts are suggesting right now that the real impact of China's zero COVID policy is yet to register in numbers. Remember, the zero COVID policy was eased only 6 months ago. And the figures that we are seeing of the last 6 months and the quarter-on-quarter decline in growth, it is still growing, but the clip at which it is growing is slower on a sequential quarter-to-quarter basis. Now, the real impact of the zero lockdown policy and the dwindling exports from China and the rising unemployment rate of China, the real horrors of that, many analysts are suggesting, are going to come out only in subsequent quarters. We haven't seen the bottom out of the China slow growth yet. The numbers that are expected to come out sequentially are going to be even slower than what we are seeing right now. And then look at this whole property crisis happening in China, where there is no credit offtake, there is no fresh investment in real estate, which is a major driver of many big companies, including Evergrande. So Evergrande's own loan book right now stands at about $340 billion, which is one of the biggest realty developers, financiers in China. Coming back to ADB's projections on India, I think ADB has said that 6.4% is the expected growth rate this year for India. 6.7% is the expected growth rate for the next financial year, which is FY25. Right. I think this year, given it is an election year, and given that we will have to tame inflation come what may, and we have been fairly hawkish in taming inflation, yes, inflation would ease. Growth should pick up. There would be new PLI and new semiconductor incentives being announced, which are going to add investments. There is going to be continued government push on building highways, building roadways. which is going to be capex investment. So even if we are in a low consumer sentiment environment right now, overall GDP growth is definitely going to surpass 6.4%.
Okay.
And RBI's estimate is 7%. And Ministry of Statistics, everybody sticks to that estimate, give or take a percentage, 100 basis points here or there. So, 10 basis points here or there. So, I think overall we will be in a range comfortably above 6.4% for this year. Next year, 6.7%, I think depends entirely on what the election results are going to show, what a new government or an existing government for another 5 years, depending on how the electoral votes come in, is going to decide on how this view of India's growth is going to shape up, and then eventually action around that view in terms of growth. Now, inflation specifically, since you asked, I think the inflation outlook, Shweta, is on Asia, not specifically on India, and the inflation forecast has been kept at 3.6% this year and 3.4% next year. So 3.6 and 3.4% are the inflation estimates for Asia as a whole, and within this, fuel and food prices are expected to decline, and therein leading to a lower inflation. But that is Asia specific, not really specific to India.
No, I think from what I'm reading, Asian Development Bank says growth at 6.4% is going to be on the back of cooling inflation. So
cooling inflation in the region.
In the region, and in India. We will have to, of course, wait and watch out for.
So India, hopefully, if you're able to meet that 4%, hammered down inflation, by fiscal and monetary policy both working in tandem. I'm not sure we'll do much on the monetary policy front on tightening right now, but if you're able to beat it down,
fiscal either, given that we are in an election year.
I mean, let's see. We might have better tax collection, right? We might have better GST collection. All of that is going to add to government's revenue.
Right, and my only worry is maybe we'll have more, SOPs being doled out, given that it's an election year.
As long as there is more earning and there is more deployment of that earning to any growth sector, whether it is industry, whether it is infrastructure, whether it is social, upliftment, as long as that money is being collected and deployed towards a productive activity, it is going to lead to some sort of growth, right? So if you're able to hammer India's inflation down to 4%, I think RBI, Ministry of Finance, Prime Minister Narendra Modi will be in a very happy situation.
Absolutely, and that of course is going to be one of the important, it's an important mandate for the government and as well as for the RBI to bring down inflation